Advisor. Good afternoon, everyone. Thank you so much for attending and listening to the Blockchain Advisor podcast. Today is February 6th. It's a Tuesday, and we have the pure honor of chatting with Mark Longo, the creator, the content master of the Options Insider. And I'm super excited to have Mark with us today. Why? Because we used to chew on the same bone from the options trading floor at the Chicago Board Options Exchange. We have a lot of common background, both in the listed option space and in the cryptocurrency space. Mark, thank you so much for joining me today. We're going to pick your brain and just have a friendly conversation.
Thank you for having me, Bill. I like sometimes having the microphone turned back on me. Get a little rare glimpse inside the studio. We don't do a lot of video in here, so give your viewers and listeners a rare glimpse where all the magic happens day in, day out.
I think that that's amazing. We're going to have a great conversation, and we get to see what goes on behind the veil at the Options Insider.
Behind the scenes, you get to see my wintry beard in all of its glory before I shave it off. So there we go.
Great. Well, listen, let's just get right into this. Okay. So what I'd like to do is go, way back in time and just kind of hit these high spots of your life and your career. So I guess my first question, Mark, is how did you get started in the option trading business?
Ooh, that one was interesting. I go back to Nick Leeson. I was probably one of the few good outcomes of Nick Leeson. Of course, Nick Leeson blew out Barings, was a huge scandal. I remember I was in college at the time. I had just switched from engineering to finance. I didn't really know what I wanted to do with my life. I thought I was going to be a chemical engineer. I went to Cornell for chemical engineering. Then partway through that, I realized I don't know if I want to make soap in a factory in Iowa for the rest of my life. And so it kind of had a bit of a crisis of conscience there. So I started looking at other things. I switched into finance just because that always interested me. And right after I did that, I think I was in the middle of a corporate finance course on issuing bonds. And that's when all the Nick Leeson news broke. And I thought, man, were these derivatives things? I'm not what they are, but they sure as hell are scaring the hell out of everybody. Everyone seems like they're terrified of them. It seems like this would be useful information to have in my back pocket to maybe someday on a job interview. At the time, I was interviewing for internships, so I wanted to have that in my back pocket. I would be the smart guy who knew what derivatives were, and I went on the interview. So I started reading about them and started taking them. And as time went on, I ended up taking a course. They offered a course there. It was in the graduate school because I was a teaching assistant. I was able to take it, and it was all about derivatives. And once I took that course, and I realized, wait a minute, I could use options to recreate anything else that I want. I could turn them into a future. I could turn them into a stock. I could turn them into a bond. Once I realized that, I was hooked. I was like, why would I trade these other things? I could trade this thing and do all of them. And so it kind of intrigued me, and I got lured to the dark side. So when we graduated, I was the one finance guy. All the rest of my classmates, and they all wanted to go to New York, become iBankers, become other, finance related things. There were not many who wanted to be traders at all, let alone me. I was the one idiot. I want to be an options trader. They're all like, what are you even talking about? So I went to New York. I looked around there, looked at all the desks and all the rotation programs they had at places like Goldman and other places. And none of that really interested me. I didn't want to sit on a desk for 2 years and do this, and then a year of this, and then eventually graduate up to the point where you could commit some capital. And then I got recruited by a firm out of Chicago. I went out there, and my first interview for that firm was actually in the SPX pit on a slow day. And I walked down there, and I was just looking around me, and I said, really? I could do this? I could do this now? Forget it. I'm in. So I took it, and I came out to Chicago, and I got lured to the dark side, eventually became a market maker, and did that until about the early 2000s. And then even then, I saw the writing on the wall. I was like, wow, that's another reason why I wanted to do it. Because even then I thought, well, this career path probably won't be around forever. So if I want to do this, now is the time to do it. And so it was kind of fun being there during all those things happening, a penny pricing, decimalization, payment for order flow, multiple listing on all the different exchanges, and the exchanges battling each other for flow. I recall I was one of the idiots who slept over in the lobby of the SIBO bill to get the first spot in the Intel pit when they listed. I literally slept on a bench in the lobby of the SIBO.
We all had to pay our dues.
Yeah, it sounds ridiculous
on the floor
now.
Outside.
At the time, there were a lot of guys doing it. The whole floor was covered with people. So I was the one smart guy who got there early and got the bench. Only one bench. So I had a modicum of a bed. But yeah, these are the kind of things we did that were just normal. And then, but even around the early 2000s, I started seeing that I didn't think this was long for the world. Payment for order flow, other things were starting to eat into our business. The spreads were shrinking. The amount of risk we were taking day in, day out was increasing. The amount of money we were making day in, day out was decreasing. Those two graphs were going in opposite directions. And so I didn't take long to realize, I was going to probably finish up. I ended up, oddly enough, closing out my accounts and selling them back to my firm out in Intel and some others a week before 9/11.
Really?
It was just oddly inauspicious, or I guess auspicious timing at the time. And it worked out because, obviously there were some issues. I had most of my risks covered, but it was not a good time for anyone to have a lot of open positions. You were still down there.
For sure.
And so I kind of floated around for a while. At the time, I got lured into doing a column for some people back in the publishing scene in New York, Traders Magazine at the time, because they were trying to, even this is post 2000 meltdown in stocks and into 2001. And they realized the stock thing was kind of played out. They wanted to have something a little bit sexier. And they said, how about this options thing? They had heard about me that somehow, I think they knew some people that we knew in common. And they said, hey, you're one of the few traders we know who can put a sentence together. At the time, I didn't realize how rare of a skill set that was.
Mm-hmm.
I thought most people could do that. And I realized now, having engaged with traders for decades, that is not the case. Most of them think in pure stream of consciousness, stock go up, I buy, that kind of thing. So that ended up me doing a column for them about options trading and the options market. And at the time, it was really there was striking price was out there, but that was really about it in terms of content about options in major mainstream publications, let alone in terms of my stuff. I was really the only one writing about it who had a background from a trading perspective in the options world. So it made my stuff kind of unique, and people started reaching out to me saying, could you do this? Could you do that? And it was never my intention. I was still kind of doing this on the side as I was winding down my market making. It was never my intention, Bill, to say, I'm going to create all this options content, right? It was something that literally fell in my lap. And as the market making was dwindling, going like this random thing that I had on the side was starting to go like this. And so I thought, well, I don't know, maybe I could do this as a thing. No one's doing that. Maybe there's a reason why no one's doing this, but maybe this could be the thing, Then I don't have to fight for edge every day. I could still be involved in options, still talk about options, still trade options, but it won't be my day-to-day fighting for edge, paying for order flow, dealing with all the nonsense that was going on the exchanges at the time. So that led to, I would say, around 2006 is when I had the idea for what became the Options Insider. We started building it then. We built the website, built all these other things. Oops, as I hit my microphone, very unprofessional of me. And at the time, I thought, what else can we do? We have a website, we have this other stuff, we have an email newsletter. Everyone has that. I was like, what else can we do to maybe even broaden the options demographic a little bit, right? Because at the time, I knew I can get that guy who was 60 years old, $500,000. I knew I can get that guy. That's who the options demo was. I thought, how do I get anybody else? And so I thought, let's mess around. Let's play with some newer types of media. And at the time, I've always been a bit of a technophile. And I was listening to a lot of podcasts. This was pre-iPhone. This is like, 2004, 2005. You had to have an RSS reader to get them. They were all about technology because that's the only people who could figure out how to get them. So I was listening to a lot of tech podcasts, and I thought, no one's doing this for finance, let alone for options. Maybe we could be the ones. And so we kind of came out with, when we launched the website in January of 2007, so a little over 17 years ago now, which is crazy, Bill, when I say that out loud. 17 years I've been doing this, talking into this microphone, not this exact microphone, but something like this. And so I thought, well, we'll use the podcast as a way to, as an ancillary way to deliver the website content. My plan was we're going to read the web content, and that will be the podcast, right? And because I didn't know anything. I was a trader. I didn't know anything about broadcasting or creating that kind of content or anything like that. And so we started doing that. And the first show was just crazy. It was way too long. It was like 2 hours. It was interviews. I think our first guest ever was Tony McCormick back when he was at Schwab. And he still has a pride of place of being our first ever guest. And he came on. He didn't know what the hell he was coming on, but nice enough for him. He came on anyway. So he gets the distinction of being the first ever podcast guest, I guess, for options. Anyway, and so we did these shows, and we started doing these epic. There was listener mail. There was all kinds of art. It was like a 2-hour extravaganza, Bill. It was way too long. I had no idea what I was doing. I was recording it on a little headset mic in the corner of the little studio we had at the time. Sounded like crap.
People had an attention span of 2 hours back then. Now we have to do it in 140 characters.
Maybe you're right. And so quickly, and no one got it at first. I remember going around to what would be our big sponsors for, the website and other things, the places like SIBO and CME and other places like that, brokers. And I would say, we have a website and they got that. The time display was hot. They wanted to put banners up and stuff. And we have email and they kind of got that. And I said, we also have a podcast, and they crickets. I remember being in a room with an enormous global exchange. I will not say which one. And they stuck me in a room when we were launching. I thought it was going to be me and their marketing guy. It turned out to be me and about 20 of their department heads. And they're all firing questions at me. And I get to the point where we have a podcast and literally the room goes silent. Everyone's looking at me like I'm speaking a foreign language. So I said, well, you get radio, right? And they said, yeah. I said, okay, it's like that, but you don't need to be near a tower. You don't have to listen at a certain time. You can get it whenever you want. And so that's why we started calling it Options Insider Radio, because at least when I would have those early meetings with potential sponsors and guests and everything, they wouldn't have to ask the question, what the hell is a podcast? They would get radio. So they knew it was audio and they could work from there. So that's why we started calling that, and the name just stuck. And then over time, people started to get it. Obviously, the iPhone launched about 6 months later. The iPhone. That helped draw some attention to the medium as a whole. And we've just been growing over time from there. And eventually, the network ended up usurping the other content that we make. We still have the website. We still have everything else. We still have Twitter and all these things. But people know us and come to us now for the network content. And it really has grown and evolved. We've added the pro offering back in 2020 when all the madness hit, when all the retail wanted just tons of endless content. So it's been a fun evolution to watch, the medium evolve, to watch the markets evolve along with it. New products come along like crypto, which you and I have chatted about many times. We've been able to carve up the market in many different ways. It's growing my skill as a content creator, obviously, and as a host. I didn't have any of these skills when I first started doing it. I had to learn on the fly because there was literally no one else, Bill. I couldn't hire anybody. No one wanted to do it.
Right.
So it was just me.
When you were on the trading floor, though, what stocks were in your appointment, like other than Intel, which was like all the internet stocks back then was?
Yeah. Intel came later. I was in the SPX for most of my time out there. Oh. I didn't go out into Intel and the single names until all the multiple listing happened. And then all of a sudden, as you recall, there was a mass exodus out of the indexes, which everyone thought that was old school. That's the new money, the new Wild West, the new gold rush is going to be in the single names. So all of a sudden, guys were getting into fights for spots in the new Dell pit and the new AOL pit and Intel and all. It was an insane time. And I remember there were guys in the SPX who were just putting their clerks on badges just to put them on raise. I
remember that. Yeah.
They could just get the trades because there was so much going on. So there was a mass exodus out of the SPX. But at the time, we had a group in the SPX, and I thought, let's try it too. So I was the willing guinea pig to go out there and try my hand at the equities. So it was mostly Intel. I didn't really focus. There was Starbucks out in our pit, I think. There was no Rite Aid was in our pit. That was probably the other big one. I didn't trade any of those others. I really focused full time on Intel. We had another guy in Microsoft, so I would kind of help hedge his position and kind of be his risk manager. So I did some of that. So I kind of pay attention tangentially to Microsoft. Those are the two real big ones. But we focus day to day, and luckily there's enough flow to focus mostly on Intel. But yeah, it was kind of fascinating going from the indexes to the single names, a very different order flow, very different trading style, very different product.
The theoretical edge, the bid-ask spread was insane in those stocks, and the theoretical edge coming into our trade feed was like, oh my gosh, this just has to last another 6 months and we'll be rich.
Exactly. Everyone started putting every pit they could. I had a guy in every pit, right? And that was where the money was until all of a sudden it wasn't, right? And then firms like Susquehanna and others nearly blew out because they had guys in every pit and they all became worthless almost overnight. So yeah, fascinating times to be part of the business.
But how would you describe your trading strategy, though? I mean, you're coming into the floor, you still must have had some kind of mentor that was helping you say, okay, you want to be long volatility, you want to be short volatility, this is conversion, reversal, neutral strategies.
I came from a training style that when I remember asking those questions when I first got out of college, I got in the training program. I was like, okay, you guys make markets in the SPX and you make markets in IBM and all the big crowds. I was like, you must, okay, the stock's going up. Why is it going up? And then they would look at me and laugh. They'd say, more buyers than sellers, kid. And I wouldn't get it. I was like, what are you talking about? And then over time, I had some of that cynicism beaten into me. And I was trained very early to take a delta neutral, no risk type approach whenever possible. So we would try to stay flat. We would try to just trade where the edge was, which again was one of the reasons I got out of the business, because the edge started going away pretty quickly, and you had to have more and more directional or volatility or skew risk just to stay in the game. But we tried to be flat all the time. Obviously, wasn't possible, but we tried whenever possible. And then when I went out into the equities, it was very interesting to watch, because back then, late 90s, early 2000s, all the big funds, it was kind of like it is today in the Magnificent Seven. Back then, the Magnificent Seven, well, Microsoft was still around, was still a big one like it is today. But Intel was another one. And these were the big names that every big fund had to have. So I learned very quickly that whenever any new series was listed, the funds would come in and they would overwrite the heck out of the calls, because they were all long the stock. So the call skew would get annihilated. And at the same time, they would buy puts to hedge their long stock. So the put spread, the put wing would just get bid to high heaven. So I would watch this happen time and again. It was like the second a new month was listed, there it goes. It was a race. So you would race to get ahead of it, and you would race to try to sell as many calls as you could in the beginning of the month. And the first couple of, you hit the book, whatever you could, you'd buy as many puts as you could to try to get ahead of that skew rotation, because it was inevitable. And that was one of the things that ended up kind of driving me out of the business too, is there's so much one-sided flow. There's only so much you can do all day when all you're doing is choking on calls and giving away all your puts. You only have so many bullets as a market maker, and then they're gone. And so you try to conserve, and then a week into the month, they're all gone. And then you're like, what do I do now? And it was just like that rinse and repeat. So that was kind of disconcerting to see. And that really strains your risk management when you can only do one thing over and over again. So yeah, looking for two-sided flow, we'd have to end up putting orders into other pits away, send orders to the Amex or wherever else they were making markets on Intel at the time, just to try to pick off the locals, because we needed some bullets to put back in our gun. So yeah, so that was an education to me, to see how one-sided a product flow could be versus the SPX, where it was all over the place. And every day you're quoting all sorts of crazy nonsense. 90% of it never trades, a 3x3x3 iron condor ratio swap, whatever. And some guy's just trying to set his vols, and he wants you to do it for him. So you do that kind of stuff all day long. It never trades. And then you go out to the equities, where a couple of things are different. First off, you have all that crazy one-sided flow. And then B, I remember early on when I went out there, like the last 10 minutes of the day, that's when all the old timers would roll up their sheets or turn out their hand cells and leave. And I would look at them. I'd be like, where are you guys going? This is like the last 10 minutes. This is when stuff happens. Don't you want to be here? And they all look at me like, no, kid, you don't want to be here. This is when the pickoff paper comes in. And I laughed at them. I was like, oh, you stupid old fools. What do you know? And then sure enough, the first time, I don't pick your broker. I don't care. Morgan, Goldman, whatever they were, came run into the pit with like 1 minute to go in the day with an order burning up their hands to buy 10,000 out of the money calls. And they buy them, and then you can't even turn around to hedge your stock before the stock's taken off. And then in the after hours, an analyst from that same brokerage firm would upgrade the stock or downgrade it, whatever they were doing. And then you would move against you, and by the next morning, you were already done, and they would come to just dump them back in your face. That happened so many times.
I don't know. Call me naive, but that sounds unethical.
Yeah, exactly. I made that same argument. I thought, I remember we had our broker was a floor official. I said, this is clearly illegal. And they were just laughing at me. I said, go ahead, kid, you could try to challenge it. So I did a few times. And then they always said, you can never prove that account XYZ knew this. And so eventually I was like the other guys. I'm like, okay, at the end of the day, you got to be very, very circumspect, because that's when they would come to pick you off. And so, yeah, there was a lot of that kind of thing, which ended up kind of the dark side of the business ended up driving me out of it. But there was a lot of good along the way. But you're right, it was a very educational process, shall we put it, along the way.
Sure. And was there a time during when you left the trading floor, or you got on the entrance ramp of the podcast and the website, where you just thought that maybe you were kind of done with it? Like, it was just,
yes, very much so.
Like, and you wanted to give up.
I left the trading floor. I thought I had an ulcer. I went to the doctor. I was a young guy. He went to the doctor. He just laughed at me. He said, you're a trader, right? I said, yeah. He said, go home, sleep for about 2 weeks, and then come back. And sure enough, I was fine. But I thought I was horribly ill. It turned out it was just the aggregate stress from years on the floor had just built up like a knot in my stomach. And so after that, I wanted to take a break. And like I said, it was this column that pulled me back into it. And it was actually kind of funny, because I tried to get away from it for a while. So I think, I like content. Let me try spreading my wings to some other directions. I had some fun. I wrote historical articles. I did some research, did some side fun things. They ended up getting published in some magazines, various military history, other fun things like that. They were fun. I enjoyed doing those. It kind of stretched my wings creatively on the content side in some other areas. And then the option stuff would always pull me back, because it was like Michael Corleone. Just when I think I'm out, they pulled me back in because they would say, "Oh, you're getting paid how much for this historical article? We'll pay you 10x that per word for this options thing." And I was like, well, okay, I can't so it just kept creeping up to the point where it was undeniable. The demand for the options content was there. People were willing to pay for it. And I liked it. I did kind of miss part of it. I just needed that break. I needed that break to maybe rekindle my love of it. Because at the time, you're right, I was done. I was out. I was like, I came to Chicago saying, okay, I wanted 5 years. If I can last 5 years in this business, I'll come in here, I'll make my money, I'll go do something else. I remember when I took my test for my badge on the SIBO, the head of the exchange, this president, came down at the time, and he said the same thing. He said, everyone comes here and asks me, can I just have 5 years? Apparently I wasn't the only one who wanted that. Mm-hmm. He says, everyone asks me that, and I always tell them yes. He said, you guys are the first class I've ever said I'm not sure to. Because at the time, ISE was just coming online, right. The electronic stuff was coming online, and people, traders are a grim lot. Even back then, 98, 99, people were at 2000 on the SIBO, right? The whole thing's going away. Mm-hmm. So the president of the exchange comes down to greet our class, and that's what he tells us. I can't even guarantee you, a few more years in this business. So that was kind of disconcerting.
It's so interesting that you say that, because I remember I did a couple of stints on the board of trade, and in the grain options pit and in the grain futures pit. And all the locals were like, no, listen, the first thing you do before you get married, before you buy a car, before you buy a house, is you get a seat. It was the complete opposite of the CBOE. Don't even think of buying a seat. This place is not going to last. It's going to be a waste of money. The seats are going to zero. Exactly. And I unfortunately never actually bought a seat. I mean, I was this close after 9/11 to putting a bid in. And I didn't, because multiple listing was coming on. Rather than Dell being on one exchange, it was on 4 exchanges and 6. I'm like, there's just no way I can buy this and actually lease it out and make a living, or make it wasn't a good investment anymore. So
yeah, for a while there, that seats were kind of everyone talked about the .com bubble. No one talked about the seat bubble. You could buy these seats for, I don't know, that time, like 100 something grand. You could lease them out. When I was leasing my seat, they were like 15 grand a month. So you're paying back your seat very quickly. Right. And then on top of that, when of course the big deal went through, those seats went for a lot of shares, a lot of money. So it ended up being a great trade. You're right, but at the time, no one would have thought that.
Right. So speaking of history and historical articles, you and I, one of our favorite moments that we seem to recall was we snuck away from the trading floor. Well, I was already off the floor at this time. We were market making for the company that I worked for. We were market making in Merrill Lynch holders ETFs. So we would buy and sell we were market makers and primary liquidity providers in those ETFs, which were some of the first ETFs that were listed. And then we would do all the components underneath it to offset and hedge the volatility. But we snuck away for a quick break in May of 2010.
What day could he possibly have chosen?
what could have possibly have happened? Now, I'm going to play the video clip that was sent to me from the floor of the Chicago Mercantile, and it's about 3 minutes long. All right, so just hold on to your hat. I'm going to click the play button, and I want to treat our listeners to what a flash crash was really like. Are you ready?
Yes.
Well, this is what was happening when we enjoyed a nice Starbucks, which was kind of new for me at the time.
Got to stop right here at 45 or 50. I mean, but that's way too much. What is it? Is it 75 then, or what? What'd you say? It was 1050 something? 1053. So 90 handles? That's too much. Right. That's way too much. 4 even bid here now, guys. 40. You're talking about 1,000 Dow points. It's just too much. 13 even bid here now. Once again, I'm at 13 even bid now. 13 out. Sorry, trading right now. All right, guys. Sorry about that. There's nothing I can do about that, guys. Once again, on it for you here in a big way. Paper came in. Huge paper sellers coming through here, guys. We got fast market up on the boards here once again. We have seen some big paper sellers coming in. It all started out up above around 38 even here now, guys, talking about 25 handles of solid sell side activity here, guys. They have just teased the limit down in the S&Ps would be 1053 even. So we still have a solid 60 handles of range left. Here they come to sell them again. 9 half straight night, 20 straight night, even straight here now, guys. 8 half trading as well. Once again, guys, they're going to get it 8 half straight, even offer. 7 even offer. 6 halves are trading here now. 6 evens are trading. 5 evens are trading here now once again. 5 evens do trade here. You're going to get a new 5 even offer comes in. 4 evens are trading here now. 3 evens are trading here now. 3 even here now. You're going to get a low print of 1103 even. Guys, 2 half offer, 3 evens are trading here now. Once again, I'm off of that 3 even here now. 2 half, put him out of that 3 half.
Well, I think we can stop there, but you get the hint. And then, of course, we hit limit. We spend a little bit of time there, and then all of a sudden, the market turns around, and there's no sellers. And it's like 1 bid, 2 bid, 3 bid, 5 bid, 6 bid, and it was just those were the days.
And I happened to pull you away from your risk management that day for a coffee and a cigar. The one day we picked to do that.
I know. Well, lucky for us, though, we had already stopped trading like for the second time by the time I got back to the office. So there was a little bit of, I was able to get back to my desk without the bosses finding out.
Almost cost Bill his job that day.
Right, exactly. All right, so let's get now, Mark, let's get into the Options Insider a little bit more, the crypto rundown, the advisor rundown. I mean, you had said previously in the conversation that you were kind of carving out all these little spots. And what was some of the inspiration behind, the crypto rundown or the advisor side? Was it from your sponsors asking you to create a whole new stream of content, or did you just feel that you were kind of A/B testing and realize that maybe investment advisors, which
advisor one was kind of born. I was asked to do a panel at the OIC conference back in New Orleans a while ago, over a decade ago now. And I kind of thought they just hated me because they stuck me on the early Saturday morning, I think it was, panel after the night before everyone was out till like 3 a.m. We had our own parade down Bourbon Street. And I thought no one's going to be at this panel at like 8:30 a.m. the next morning. And it was about advisors and their use case for options. And sure enough, when I did that panel, the room was packed. And I was like, man, I wouldn't be here if I didn't have to host this panel, And we had some interesting advisors on there talking about this stuff. And it kind of opened my eyes a bit to, hey, there's a lot of need here from a just these advisors have no idea about options. And also maybe there's demand from the audience. People want to listen to this. So I thought it might be a good time. So I talked to Alan Grigoletto, was at the OIC at the time.
Mm-hmm. Great guy.
Yeah, a great guy. And I said, we should do something. And so we ended up putting together the show. It was started with the OIC folks, and it was really just aimed to address that audience. And that audience still to this day just needs education. Like, the average advisor, a lot of them still don't know what a covered call is or a protected put or any of these kind of things. So they like being able to listen to a show like that on their own schedule. They don't have to ask the guy next to them, hey, what is that? No one knows. It's their own secret. And they certainly don't have to let their clients know that they don't know this stuff, right? They can listen to this, get a little bit more armed. So that was kind of the birth of that. And then the crypto rundown, that obviously came around. We were thinking about that obviously back in 2017. That's when the futures were coming online. SIBO listed the futures, and then CME listed the futures. So it seemed like there was interest in this. I think what really cemented it for me was, I think it was late 2017, maybe early 2018. We had my buddy Tony Saliba was in the studio here at the time. And I think I was joking with him. Tony's been around the option space forever. He's a guy who literally has a lot of irons in the fire all the time. He's always got new stuff cooking. And so I was joking with him. I said, hey, I think I'm legally obligated at this point to ask you about Bitcoin. I think he was launching the new Matrix broker. That's what he was doing. Mm-hmm. And so he was in here talking about that. I thought he was going to laugh about it. Like a lot of other guys in the derivative space. Oh, that's a joke. That's the Wild West. That's crazy town. And instead, his eyes got really wide and he started going on for 20 minutes about how great Bitcoin was. And I thought, wow, he's really drinking the Kool-Aid. And so I started looking at it a little bit differently. I started talking to other people in the space who had been market makers like myself, professional traders. And they started seeing, I think, what he saw there, which was opportunity. At the end of the day, what do options traders need? They need volume and volatility. And there certainly was volatility out there. The volume was still being developed, and also it wasn't quite as locked down from a regulatory perspective. I think that attracted a lot of the Chicago market making and trading community as well. So it was clear to me that there was interest in this. The CME and SIBO had listed products, so there were actual listed products we could talk about. We partnered with a market making firm at the time that was trading these things, and we got some data going on what was trading on places like Deribit, and it became a fascinating new content area for us. And, it's been fun to watch that because people come and discover that show that would never listen to a traditional options podcast, right? They don't know anything about options. They're not interested in options. They want to come in to talk, ETH and Solana and all that kind of stuff. And so they come in from this show, they discover it on all the different platforms, and then they start discovering our other content. So it's been a great little gateway drug for people who are coming in who, discover it, and then they say, oh, there's these derivatives things too, and what are these options things? We talk a little bit of BITO options and Mara on there too, to kind of sprinkle a bunch of different products on there, and then they kind of start to graduate to other shows like our Options Bootcamp show, which is our educational show, or Options Playbook Radio, and then maybe they graduate to Volatility Views or some of the other shows. And so, yeah, it's been fun to have that new entry portal for new people coming in who crypto native probably would never think about listening to a listed options, listed derivatives about crypto show, and yet they do. So it's been, and I'll give you a little anecdote. In the early days of that show, when we first launched it, I remember looking at the data, and we've been doing shows for a while at that point. So I was used to seeing the usual suspects. Our shows are popular in New York and Chicago and London, all the major market centers, right? And that's what you would expect. And then the crypto show launches, and it's completely the opposite. The only people listening are in far eastern Washington state and far, far middle of nowhere Kentucky. And so I looked at this, and that's where the hot spots would be on the map. I looked at that, and I was like, that doesn't make any sense. There's no one here. This must be wrong. Run it again. So we run it again and run it again. The numbers kept coming back the same. And then eventually I did some digging, and I realized that's where the power was cheap. That's where all the mining setups were. So that's right. The early adopters of that show were the miners who were looking to hedge and were interested in crypto derivatives. And those were the first people. It wasn't, the market makers in Chicago or the traders in any of our usual suspects. It was those people. And then over time, others have discovered it, and it's kind of become like the rest of our shows. But it's been fascinating to watch, again, the evolution of that audience and what they're looking for from an overall content perspective, I say, as I knock things over here in my studio left and right.
So as a newbie podcaster, are you posting these shows on your website and then looking at Google Analytics? Like, how did you know where people are?
No,
how does it work?
We got away from that a long time. We used to host it all on our website in the early days, and then it quickly got too big. The website was never designed to be a content distribution platform, right? So it was breaking our site.
Really?
I remember my webmasters being like, what are you doing? What is going on? How much bandwidth are you pushing? So I quickly realized we needed to upgrade it. So we switched to Libsyn, which is they distribute most of the big shows and love, all the podcasts out there, and they provide a lot of those analytics for us. We can see where people are coming from geographically and what kind of devices they're using to listen. So that's been kind of nice. But yeah, we used to in the early days, we used to do it that way and look at Google Analytics and see who's coming to the file. And we quickly realized that was limited and it was breaking our rest of our system.
Wow, that's pretty amazing. And would you say that, so when you transitioned, well, not when you transitioned, but when you start coming out with the crypto rundown, would you say that you've seen a spike or an increase in listenership because of the Bitcoin ETFs being approved, maybe from the advisor side, or maybe just alone in the crypto space, or has it been slowly, organically, growing for people that want to know more about crypto?
That shows definitely had its own kind of organic trajectory. It's grown over time. Obviously, there's things that have happened simultaneous to that obscured a bit, like the explosion of retail in 2020 and all those years after the pandemic. So it was hard to tell if they were coming just from crypto, if they were coming just from the regular retail tsunami that hit us then as well. But certainly in the last few months, again, we've seen the run up going into the ETF approval, a new wave of people coming in and discovering that content first. So I would say definitely, yeah, the ETF approval obviously drove a lot of volume, drove a lot of buying interest, and it drove a lot of interest in shows like ours. So I'm certainly not mad at it. And now that, we've seen that settle out a little bit, people are still listening, still tuning in. So it's great to see the folks are enjoying the content. That's all we can ask.
Right. I'm really, really excited about options being traded on Bitcoin ETFs, because I think that's really going to be interesting. And
yeah, we were talking about that
conversation a lot.
Yeah, on our pro Q&A, we had our guest, Scott Nations. We had a question about that. And we were talking about that because we were looking at all those ETFs you were sending me the other day, all the new ones that are in the hopper, ready to come out. And whether it's on the, and he also mentioned, because usually we would have seen the options by now. The exchanges, they see money, they roll out. They used to be, months before you got a new IPO, got options on it. They've reduced that sometimes as little as 2 days now. We've seen hot IPOs. These are, I think they're coming up the works. I heard Scott was saying he thinks the regulators have asked them to hold off on the options. So I haven't heard that myself. I need to go dig around a little bit, but that would explain why we haven't seen the options yet. Because, the exchanges are for-profit public companies now. If it makes dollars, it makes sense to them. So they would already have had the options if they could. It sounds like they're being held back a little bit.
Scott Nations, wasn't he a SIBO trader? That name sounds so familiar.
Yeah, he was SIBO. He's created a bunch of vol products out there, things like, the NASDAQ vol products, vol Q, all that stuff. He was at CME for a while too, I believe.
Oh, sure, sure. That name sounds so familiar. Interesting. All right. So what about like how do you prepare? How often do you record content and how are you preparing for it? In other words, do you have your favorite websites or news feeds? And you don't have to share it if you don't want, but do you wake up every morning excited, after having your cup of coffee to get into the studio and start researching and preparing? Or is it now just so you already got this figured out and you just roll out of bed, have your coffee and bagel and sit down and you're just cranking out?
How often do we produce content? All the time, I think, is the answer to that. A lot. People always ask me, how the hell do you crank out so much? And part of it is we have a great team here that helps out in terms of, wrangling guests, getting people ready for it, doing all the backup stuff, helping with kind of show outlines, because we have a lot of shows that are regular now. So we have a sense of where the shows are going to go. We have a template, and then we kind of fill those out with data as the show goes, right? So maybe for the volatility show, we'll have a lot of different templates for different products we know we want to talk about, and we'll just fill them in as the show arrives. What's going on in the market? What's going on in volatility? What's going on in the volume in these particular products? Are there any interesting trades we want to highlight? Where does the guest want to go in terms of topics and areas of expertise? That's usually where the wild card comes in. And for anyone who's done any, content producing or hosting, definitely the interview side and the guest side is always the most challenging for anybody. Because there's a definite skill set, and you're learning this now doing this show, Bill. There's a definite skill set to being able to host a show and conduct a good interview. A lot of times you'll see people and they'll come with their army of questions prepared ahead of time, right? And they're just head down the whole time saying, okay, yes, here's the next question. And they're just reading off a list of questions and they want to get to their content. They're not even listening to what the person is saying. Right. And, obviously, I think the medium, the interground there is really where the good people lie, because they come with armed with some questions, but they also listen to what the guest has to say and they could feed off that and do that. I would say for our crypto show, it's kind of been the most challenging lately, because we have guests come on there just completely out of left field doing, all sorts of crazy layer 3, this, that, DeFi, that, permissionless this. And so there's a lot of, it requires a lot of shifting of gears for me to go straight from an unusual activity options show talking about, your Apple, Tesla, and NVIDIA options. Now you got someone on who's creating a DeFi crypto derivatives exchange on this layer 3 protocol. And it's a complete shifting of gears. So
with interoperability with the Solana network.
yes, there's a lot of that. So it does require me to change things up a little bit, which is kind of fun. Sometimes a little challenging.
I love having the conversation, but then I've got to save the audio file and the video file, and I have to trim it and I have to clean it up, and like all that back end stuff. That's the stuff that wears me out. I mean, it really does.
There's a lot of that. We have, obviously, thankfully, we have good editors and things who take a lot of that off my hands these days. Otherwise, it'd be a lot of work. We do so many shows. We do at least usually a couple of shows a day, usually for an hour each, usually. So that's a lot of content. So yeah, we have thankfully good editors who make me sound good at the end of the day, Bill.
Yay, that's all you can ask for, really. And so let me ask you this, Mark, then, in terms, are you mentally prepared? So Gary Gensler would say that all cryptocurrency tokens are securities. And of course, the cryptocurrency people say, no, securities will be tokenized. Part of me, the conspiracy theory in me says, Gensler wants to have every cryptocurrency as a security, because the truth is, I think listings on an exchange have slowly declined over the last 25 years. There has not been a huge uptick in new listings on our regulated exchanges. And by saying that tokens are securities, he basically opens up his office to regulating 10,000 more securities.
Purview, right? Yeah.
It's like a wrapped gift. Here's 10,000 securities that will almost double what you have now. Well, probably up by 35% overnight. Are you mentally prepared to start covering 5,000 more cryptocurrency tokens?
I the conspiracy aspect of that, I can maybe see some of that. I mean, who doesn't want to quadruple their purview overnight, right? If they can, as a regulator, it's job security. It keeps you in the business, right? So you have some vested interest in I met Gensler a few times. I could maybe see him doing something like that. So yeah, that's an interesting idea. I think that would be great, just for, the sense of not so much him expanding the purview of the SEC as much as just getting more insight and clarity around some of these tokens, because you're right, they are interesting. A lot of people think they are the future. It would be great to see some of this, because for me, where I still come down on all of this, and to me, what's been the interesting thing about doing the crypto rundown all these years is kind of exactly what you're talking about, that nexus, that Venn diagram, where the two Venn diagrams overlap. The traditional finance world on one hand, so the world we come from, which is funny to say traditional, because for a long time, the options guys were considered the weirdos. We weren't traditional finance. Now to the crypto folks, we're traditional finance. So you got the crypto natives here, you got the options and traditional quote unquote finance people here. And where the two Venn diagrams overlap is where all the fascinating stuff is happening. Look at, FTX a few years ago, now a year and a half ago now. That for a lot of people, that really cemented the schism. A lot of people were like, okay, they were hardcore DeFi to begin with. They saw that. They said the man in the middle is what gummed up all the works. So you know what? DeFi is the answer. I'm going to go all in on DeFi. That's the solution for crypto. Other people saw that and took the exact opposite approach. They said, you know what? Really, the problem there was not enough oversight, not enough regulation. I'm going to flee to the listed stuff of like CME and others because they're centrally cleared. They have counterparty risk prevention in place. They're regulated, and I can protect myself. And so events like that really tend to highlight what to me is still the stark contrast between these two opposing camps. And you see it also playing out in that tokenization debate. Some people don't want their stuff anywhere near the long arm of Gensler and the SEC, right? Nowhere. That's kind of anathema to the entire ethos of crypto is regulation. Others say, I'm not going to touch that stuff until you do that. And that's how you really get the real money, quote unquote, into crypto. So yeah, that to me, those two Venn diagrams where they overlap, the push and pull, that to me is what makes the crypto rundown so fascinating. We'll have a guest on that's crypto native, and they'll be fully drinking the Kool-Aid on how whatever particular project on whatever particular layer. We'll have someone come on a week or two later from the more traditional side, and they'll take a different, completely opposite approach. And they're all viable. They're all completely within their realm of being right. So it is fascinating to me to watch that intersection. Obviously, no one knows how it's going to play out yet, but I think some middle ground has to be achieved, right? I don't think for a lot of the traditional players, it can't just be all DeFi because that is kind of anathema to them. And then for the people who are in crypto native, they might need to make some concession. We already have, people came to crypto thinking it was completely anonymous. That's already been blown out of the water. So they've already had some of their illusions shattered about crypto. So maybe a couple of steps forward in terms of some oversight, some regulatory, some protection of counterparty, some clearing, hey, make sure the guy you're trading all these, whatever, Bitcoin 40,000 calls with is going to be there when you need to come collect it, right? Those are these very basic things that are still preventing a lot of the size money from getting into this space. So yeah, to me, that's what the crypto rundown is all about. That overlap of those two charts and how they're butting heads. It's fascinating to me because, again, we have people come on who are just complete polar opposites one week to the next, and the swings are fascinating. And yeah, we're against their falls. I do think they need to be a little bit more proactive in terms of here's our guidance, not just regulating through, different crackdowns here and there. And that's how people learn what they want, is because they get an enforcement notice. It's no, here's our outlook. Here's our guidance. Here's what we think the crypto space should be. And people can respond to that if how they want,
Some people think that they have to completely revamp the SEC to take into consideration these cryptocurrency tokens, because we are really on the beginning of a new financial system, either a parallel system or a converging system. And the 1940 Act it's just that, right?
Yeah.
It's time to completely rewrite everything, because apparently, at least from my perspective, a lot of this innovation is going overseas. Europe, Philippines, Asia, South Africa, South America, Latin America, they're all racing to this. We've got 100 central banks with central bank digital currency projects already in place for like the last few years. I think the Federal Reserve published their first paper in 2019 or 2020 on digital currencies. And here we are still kind of arguing, what crypto is and where it fits. And, PayPal, JP Morgan, Goldman, BlackRock. I mean, we just see so many of the big players almost pulling the SEC behind them. And maybe it's always been that way. I just didn't it didn't seem that way to me, but my perspective is a little bit different now.
It does seem like we have, I mean, it's funny to say this, but it does seem like we have been kind of left behind in some of those races. You're right. There's a reason why we launched that Crypto Rundown show in partnership with a market making firm out of Australia, because that's who was trading this stuff back then. And so many of the cool guests we've had on doing the coolest, most bleeding edge stuff, they're always overseas. Europe, Australia, Asia, very few of them are located here for obvious reasons. Even look at all the flow we break down every week is all on Deribit. 99% of our listeners can't touch that stuff.
That's right. That's right.
It's like we're talking about some ethereal activity in the cloud that they can see but never touch. And so, yeah, that's frustrating to me. It's frustrating to a lot of people out there that the flow is happening. They just can't participate in it. There have been attempts, obviously, to crack that nut a little bit. Obviously, Ledger X here in the U.S. Then, of course, we saw what happened with them with FTX, and now they're part of MyAx again. So I'm hoping they're going to get that up and running again. So there will be more quote unquote legitimate listed crypto derivatives venues where people here in the US who want to trade those things, they want to write a call against their spot Bitcoin. They should be able to do that, without having to violate the terms of service of Deribit, the EULA to go do that. So yeah, that's frustrating to me. You're right, to see these other countries steal a march on us in these markets. On the flip side, though, if the SEC is going to take all this on, you and I both know they're already critically understaffed to even handle options. They have very few people on their staff that understand the options market. They're almost entirely focused on stocks because that's their main purview, and there's so many of them. Very few of them there really understand what goes on in the options market. They really don't watch it that closely, which is why still to this day, a lot of the unusual insider activity goes up in the options market, which we track on all of our shows all the time. So they can't even come to grips with the market that's already under their purview, which is options. If you add tokens and crypto to this now, they're going to have to 10x their staff. I don't know how they're going to do it because they are critically understaffed for what they have already.
And my gosh, we've been, options. You and I was started on the floor in 1981. And so you think about how many years that's been that options have been expanding and growing. And, maybe for me, I'm answering two questions here. One, I think it's just familiarity. Like you and I, when you interview me and have me on your show, you ask me about the 1.1 billion option contracts we traded like in the month of January. I'm like a bill, like I can't even wrap my head around that. Like who even does options anymore? Yet it keeps continuing to grow and grow and grow. And I think it's just my own familiarity in the space. And I don't think it's that interesting anymore.
You started pre-VIX. You started OEX was the big dog back then.
Yeah.
Now, how many people have even heard of the OEX anymore, right?
I think I still have a pair of suspenders from this. What was that product that came out? It was like a Dow product. I was on the new trading floor.
The Dow options. They listed Dow options on the SIBO, yeah.
JT options or something like that. I forget what those were called. But it was like a cap product, I think, like a collar product, I think for the Dow, maybe, or maybe it was a missile product back in the 90s where they just had all these, it was like Beanie Babies were given away. All the traders wanted their pair of really crappy suspenders that came from China.
You want a fun story about Dow options? My literal first day on the SIBO trading floor, I just gotten hired. I just relocated from New York to Chicago. I was finding a place. I come down, I'm a clerk. They give me my jacket and my clerk badge. I walk on the floor of the SIBO and music is blasting. There's like Metallica blasting. Walter Payton is down on the trading floor. I think Jordan or Pip, one of them might have been there as well. And I was just like, this is amazing. What's going on? There's confetti flying in the air. There's poppers going off. There's celebrities everywhere. Everyone's clapping. And I was like, what is going on? Turned out that was the day they launched the Dow options. And it was amazing. And I said to the person, I was like, is it like this every day? They looked at me.
For me?
I've never seen this before. And sure enough, it never happened again.
Right.
That was the one day.
Mark,
but it was an amazing introduction. I was like, wow, this is the coolest place to work on the planet. This happens every day. Yeah, no, never happened again. But it was a fun way to start. And it was all because of the Dow options.
Well, that was a complete opposite of my first few days on the trading floor. When I started in the old trading floor on 7.5 of the board of trade, all the traders were trying to knock the cockroaches off the ceiling with trading cards, just whipping them up in the air because we had a cafeteria that shared that space. It was just filthy and disgusting. We really needed a new trading floor. But my question, Mark, what was your trading acronym? What was your 3-letter badge?
When I started, they kind of just when I switched to the firm, they just handed me a badge. It was my initials. It was MSL, and I was like, that's not very creative. So I went back, I made him redo it. And I said, I want something that's going to be noticeable and memorable across the whole SPX pit. So a broker's got to yell like, 50 yards away. He's going to remember my acronym. So I said, what can I do in 3 letters that would be memorable? I said, how about Devil, DVL? And it was available. So I got it. So that was my acronym. I was Devil. Wow. And for the longest time in the SPX pit, I stood next to a guy whose acronym was MOG, Man of God, it stood for. So he was deeply offended by my acronym.
That sounds familiar. Who was that?
Yeah, I don't remember his name. I just remember his acronym was Man of God. That's what it stood for. And so weird. But brokers remember that. Like, hey, Devil, I'm going to give you 50. I'm going to give you 100, whatever. So it worked from that perspective. It stood out. I was the Devil. And so that worked. And so that was a little bit of I learned early on the value of branding.
Who did you clear through? What color was your jacket?
It was Bear Stearns. So my trading cards I have are still around here somewhere. It was the blue and yellow. And I was DBL 551. That's what I have the card here somewhere. Sure enough, now that I need it is gone. But the guy would come around. He'd make those custom cards you could hold up so people could see you from like 50 yards away. And I have that somewhere. I don't have my trading bag. I should have taken that. I was foolishly did not.
I know. I wish I would have kept my trading jacket, but I just let it go. I felt bad.
And then we had black jackets because I ended up at the time was with Stafford, so we just grabbed black, and then we had blue.
He was my very first employer. Stafford hired me in late 1980, early 1981 as his clerk.
Everybody did Stafford. It seemed like back in the day they were the way station.
I was his first.
Oh, really? You were the first? Oh, so you got it all started.
Yeah. He had just he was living temporarily here in Chicago, but he came from the East Coast and was commuting over the weekends, and I was his first clerk, which was pretty exciting.
You lured him to the dark side, Bill. It's all your fault that I got into business. I blame you.
Well, okay, another question. Your listeners, I mean, I'm pretty excited and happy that you have people that are asking questions on the Crypto Rundown. People are answering your poll questions, et cetera, on Twitter. Well, I guess my question to you is, how often do you receive content and questions and when you're connecting with your audience and, their feedback, and then do you then take that very seriously to try to improve the show? Like how much constructive criticism do you get, and how much of the show really is a function of the people who are reaching out to you, if at all?
Yeah, we've been doing this for a while, so you kind of learn to develop a thick skin. We're pretty fortunate, though. We don't really have a very toxic community at all. We have mostly people who have been very supportive. If anything, they want more of what we do. Can this show be every day? And I was like, well, no, because I'm not an insane person, but I need to have some sort of life outside of this. But that's most of the audience we have. In fact, when we created our pro, that's the people who joined it. Very good, very kind of positive people. So we've been fortunate to attract that. Obviously, we have a decent audience on, Twitter and StockTwits and other places too. And sometimes you can't control that. You're going to get, a weirdo coming in every now and then. But for the most part, we're pretty fortunate. And they do provide a lot of great feedback. They'll chime in and say, hey, here's a weird trade we saw. What do you think of this? Could you talk about it on this show? Or, hey, I have this question. Can you discuss it in your educational show? Or, and they'll usually send in their question or their comment or their topic or maybe a guest idea for the particular show. Hey, here's a great guy you could interview for the crypto show, or here's a great guest for the vol show. So we've been pretty fortunate. They're a pretty active, pretty knowledgeable community, and they'll send in great feedback. In fact, the show I just did, the pro Q&A show, what we do for our pro members, that's all their feedback. That's them sending in their questions for whatever pro guest we have that week. So they drive all of that. So it's been fascinating to watch what's top of mind for them. That's why we created that show, quite frankly. We have so much great feedback from people. We want to give them a chance to express it themselves. But yeah, we get a lot of that. We try to incorporate it whenever we can. I don't do, except for that one pro show. I don't, because there's so many questions going there. I try not to make too many shows that are all driven by, listener context. You see that a lot of times with content creators. That's usually when they're getting lazy, right? I don't know what to do today. It's going to be a listener question show, right? We try to avoid that whenever possible. Sure. Sometimes we get so many, like on our boot camp show, we get so many, and they're just from all over the world. So some of the topics people are asking overseas in Germany or in India are very different than what people are asking here. So sometimes it's unavoidable. It's such an interesting question. It becomes the crux of an entire episode. But it's just short answer to your question after rambling is yes, we do get a lot of feedback, and a lot of it is pretty good for the most part. And it does help us, guide us in what people want. So we'd be foolish if we didn't listen to what people want at the end of the day, because they're the audience. You know, we're here for them. You know, we're producing shows at the end of the day, not, you know, webinars or something, white papers, you know, audio white papers. They need to have a content that people want to consume. So we always tell that whenever we create a new show, whenever we have a sponsor come on board or something like that, we say, hey, you know, this is a show first and foremost. It has to be interesting. It has to be engaging. If you're not okay with that, if you can't provide content that is good for that, you know, we don't want you. We want to make sure it's engaging first and foremost, and then everything else comes second.
Got it. So this thought just popped in my head. So when are you going to start the artificial intelligence or the AI insider? Because I have your website loaded here in the peripheral vision. I'm scrolling through it. The option block, the advisors options boot camp, wide world of options. And I'm like, oh my gosh, the only thing hotter than crypto right now is AI. And
or zero DTE. Those are the two things I've been mulling over if we need new additions, because we touch on zero DTE, obviously, and we touch on AI because so much of the options flow we're talking about now is, you know, NVIDIA, or look at Palantir today. That's driven by AI, obviously. But you're right, we don't have specific shows speaking to that audience. So I have toyed around with that. We use a lot of platforms here to find our activity and to come up with our data. So we could find some way to kind of harness the AI while we're using those and maybe develop, our own filters and things like that. We could kind of cobble together our own kind of AI. If we kind of do that now with some of our, I jokingly call it the Eye of Sauron on one of our shows that helps find our activity, but that is kind of an AI to that degree. So we have some of that in there already. I have toyed with the idea of making a show like that. And I mean, for us, at the end of the day, we can make 1 million shows, right? I know there's an audience for it and people would love it. For us, it's just a question of, you know, for our balancing our time it would take to create a new show, the bandwidth required to literally distribute it to everybody, which gets substantial. We have a pretty big network. You know, we push many, many terabytes a month. If I'm going to add on top of that, add to my cost, I need to have some sort of, you know, monetization on the other end to make it worth our while so I can pay for everybody who's working on it. So that's where we come through first. Here's an idea. And now if we can maybe shop it around, find whether it's a content partner or a sponsor or someone who's willing to support that content, then we're happy to put it out to the masses. But yeah, I try to restrain myself on that front because I could have 50 shows if I just let myself run wild.
So many interesting shiny objects out there.
Yeah, we have like a close to a 10 or a dozen now. And so that's a good amount. People are already right into us saying, man, you have so many shows, I can't keep up. So yeah, if we add new ones, there has to be some sort of a path on the back end for us to make sense. But yeah, I think what you mentioned there, an AI driven show where we're talking about maybe AI scans for and highlights particular activity, or maybe we have trading in AI related options, could be both. Sure. And then also something along the lines of the 0 day, because everyone's just obsessed with that right now. So I think those are probably, if we had to expand, if I had to hit the button, create new show right now, it'd probably be one of those two.
And just from a personal perspective, I guess, so, you know, growing up in the business, we heard about BRICS, right? Brazil, Russia, India, China. Then there was PIGS, Portugal, Italy, Greece, and Spain. And all these little 4-letter or 5-letter acronym of investment strategies have their rally, and then they explode and they get absolutely crushed. Part of me in the last few weeks, I've heard this term Magnificent Seven so much, it's all over the internet. Part of me is scared to death that we're going to see this collapse in the S&P 500, NASDAQ, 100, based on this Magnificent Seven, because Microsoft, NVIDIA, Amazon, Apple, Tesla, and we've seen Tesla just get completely toasted. Mm-hmm. So do you think the same thing is going to happen, or do you still believe that these companies, after all these years, are going to maintain this incredible leadership that they've had and take the NASDAQ to all new highs?
Funny you mentioned that, because I was just listening to something just the other day. I start my day, I always, even when I'm waking up in the morning, I have my smart speaker briefing that kind of wakes me up, and it's all full of, financial and journal, all these kind of things. That's how I start my day usually, kind of getting the lay of the land of what's going on. I was listening to one of those briefings just a couple of days ago, and they were talking about the acronyms, like you were saying, and how not that long ago, we were all obsessed with FANGs, right? That's all anybody could talk about. Facebook, Apple, Amazon, Netflix, Google, right? Mm-hmm. Look at that today. The N wasn't NVIDIA. There was no NVIDIA to be found in there. Microsoft was nowhere to be found in there. So just in the last few years, the evolution of that, nobody cares. I mean, I won't say nobody cares about Netflix, but it is not catapulting the markets to new highs. And Microsoft was nowhere to be found. It was the old school sleepy name. Everyone's like,
oh, the Dell of computers.
Yeah, Office is going the way of the dodo. Windows is going away. They have no money in gaming. Their acquisition is tied up. Microsoft is dead. And for a decade, they were kind of dead money. They did nothing. So just to see how that's transformed just in the last 18 months, FANGs, who cares? It's all about the Mag 7 now. So you're right. But also, I kind of am with you. I've been, disconcerted by the growing stratification of the market. When we were doing our content this time a year ago, and we had all of our guests on, everyone's prognosticating for what the year to come was going to be. Not a single person had AI-driven massive 50% rally in the NASDAQ, even in the face of aggressive rate hikes by the Fed and all these other headwinds that were against the market. And what we saw, we do a lot of obviously unusual activity on our network. Obviously, Meta, NVIDIA, Microsoft, all these Mag 7 had a great year. When you start digging below them, though, to like the second layers or even the Russell 2000 stocks, a lot of the names that we highlight in our unusual activity had their their apex for the year on February 2nd, almost exactly a year ago, and then sold off the rest of the year.
Right.
And that is by no means a obscure phenomenon. A lot of the names that we look at that are in the smaller sub-tier of names had that kind of chart. So there are a lot of names out there that did not participate in this. So you're right. I do wonder if we're getting to that. I mean, because the market's NVIDIA and look at Meta. I mean, these names have just strapped the market to their
Facebook
back.
Meta, went from 350 to 80, and now 4.
We were just talking about someone getting run over buying the 200 calls in the wrong direction a little over a year ago, and the stock was below 100. And they ended up rolling and were patient, and they got back in, and they made a ton of money. It seemed ridiculous. Like Facebook 200s, that seems absurd. And now that's almost 200. I think it is $200 in the rearview mirror now. So yeah, these names. The question I still have is and obviously, you don't want to get in front of this thing because it's, the bulls clearly have almost at this point, it seems like an inexhaustible supply of bullets. But you do wonder if this stratification can persist, if the 7 names can carry everything on their back forever, or eventually they have to run out of steam. And look at some of the names you mentioned, Tesla now, right? They're starting to feel the heat with China. Apple obviously did last week as well. Their earnings didn't light the world on fire, whereas Meta, these names that are a little bit more protected from China, they did well. So we are going to start seeing these weaknesses in other areas of the world start making themselves known. The question is that enough to overcome this almost seemingly endless bull? I was joking a year ago on the network, we're whistling past the graveyard. Man, we whistled way past it. Right? Over the course of the can't even see the graveyard anymore. We're on to the next thing. So yeah, it definitely, there is that layer of caution. We see it with the questions we get from our pro users. Hey, I'm still a little nervous out here. Questions about hedging. Just had a question today about, all these rallies, and VIX seems to have a hard time staying below 13. Does that mean maybe there's some other shoes waiting to drop? So people are cognizant of that. They're aware of that. Our pro audience, they're a little bit savvier. Some of them may be switching to more things like stock substitution now, dumping their index holdings that have done well, and maybe putting on some call to the upside, but keeping the rest of the powder dry to see in case there is so kind of renting the upside, if you will, rather than owning it and buying it, right? So we're seeing stuff like that filter in, which is interesting. I think it's hard for any sort of savvy person who's been around the markets for a while not to look at this and say, has it exhausted itself? Will it exhaust itself sometime in the near future? These are the same conversations we were having in the .com run, right, as well. I remember talking to a lot of SIBO guys then, and they would come up with some stock they were hot on. And I would say, what does it do? And what was the refrain everyone had? Who cares? It's internet, right? That was, everybody would say that. They didn't care. Didn't matter. And there is some of that now. Who cares? It's AI, which kind of puts the hair on the back of my neck starts to stand up when I hear that again. Because I've been down that road. Sure. So there are people who are second guessing this. But again, we had that sell off in 2022 and then rally again last year. So it does seem like these bulls are in charge, at least for now, Sure. And savvy people will have some risk management in place in case that turns around. But, you hate to tell people to fade this. You get in front of this and, you get run over.
For sure. All right, man. Listen, Mark, we've been over an hour on the podcast, and I could shoot
time flies when we're having fun, sir.
35 or 40 minutes. We could go in longer, but why don't we wrap this up? Listen, I really appreciate you being on the show and taking time for me. And please, I always give people an opportunity, our guests, to shamelessly self-promote their business or whatever.
Can't tell from the logo and from the stuff behind me. You could tell what it is. But yeah, you know, if you don't know our stuff, the Options Insider, you can find our content just about anywhere podcasts are available. Just search for Options Insider. We have a dozen close to shows. So we mentioned the crypto rundown that Bill is on quite a bit. You can search for specific shows like that, Volatility Views. I tell everybody just to go for our network, the Options Insider Radio Network. Find that on whatever platform you do your podcast on, Apple Podcasts, Spotify, Audible, YouTube. It's on all of them. And then once you subscribe there, you'll get everything. And then hopefully you'll enjoy it. If you have questions or comments, feel free to reach out. We're pretty active on places like Twitter. We're at Options on Twitter and Stock Twits and all these other platforms. So we love feedback. We love to hear from you folks. We love to hear people in our pro have questions all the time. You can check that out as well, theoptionsinsider.com/pro if you feel you're ready to go to that next level on the content side. But yeah, we welcome all people. Check out our content, and we hope you enjoy it.
That's great. Thank you so much again, Mark, for being on the show with me today. And I think I'm going to close with another 15 seconds of the 2010 flash crash, and then we'll wrap this up, and I'll hit the pause button. So don't leave it yet. I'm just going to play this last piece here.
Looking forward to it.
Where'd it go? Oh, well, I guess.
Fingerprints are traded. 9 hands are trading here now once again. We got figure trade here now once again. We are trading 1,100 even. Guys, we are 64 handles lower on the day here now, guys. 9.
Right. So anyhow, Mark, thanks again, and I'll chat with you soon.
Bill, it's been a pleasure. You know, I love everything you do over there at the Blockchain Advisor and Cynical Capital. Love the book. So I'm looking forward to chatting with you again soon, sir.
All right, my friend. Peace.